Hello and welcome to the New Champions Dialogue 2022. This is the session, China Economic Outlook. My name is Tian Wei. It's such a pleasure to be the moderator of this important session. This session is a joint one between World Economic Forum and CGTN. The global economy has been experiencing quite a roller coaster ride over the past few years. And the important part of the global economy is that of China's. It is not only important for Chinese economy to prosper for the Chinese people, but also for the international community. So how to understand the short-term opportunities and challenges and the mid and long-term outlook of the Chinese economy? I'm so glad today to be joined by a very strong panel from different parts of the world. I'm glad to introduce Nicolas Aguzin, who is the Chief Executive Officer of Hong Kong Exchanges and Clearing. Good to see you, sir. Also joining us is Benedict Sobotka, who is the Chief Executive Officer of Eurasian Resources Group, coming from Luxembourg. Good to see you. Last but not least, Mr. Zhu Min, who is the Chairman of the National Institute of Financial Research with the People's Republic of China. Of course, Mr. Zhu is also member of the Board of Trustees of the World Economic Forum. These panelists are going to bring us a great discussion on the China's economic outlook. Not only that, today at the end of the session, we're also going to welcome remarks and thoughts coming from Jeremy Jurgens, who's the Managing Director of the World Economic Forum. He is going to bring us more final points on this discussion. What a pleasure to see all of you. Now, let's jump directly to the discussion. Professor Zhu Min, tell me more about how do you look at the short-term growth rate of only 0.4% for the second quarter this year for the Chinese economy? What does that mean for opportunities and challenges for the rest of the year?
Yes, you're right. I think the second quarter growth is really weak, and also the first half year of this year's economic growth was not very strong. But I think the key was, if you're looking for the short term, I think it will be the stabilizing. I think the whole economy is stabilizing, and if you're looking for the monthly data, right, April is really weak, may pick it up, and June was quite strong on 3.9% GDP growth. If you're looking for the others, power consumption growth, jump 4%, service MPI jump 7 percentage points, go back to far higher than 50 base. And the manufacturing PMI also over 50 base now. So we saw things are stabilizing, and particularly on the supply chain, and also working smoothly now, almost full capacity, and transportation trucks on the roads very much, in the full level. So I think the whole thing is stabilizing. I'm very much looking forward for the second, particularly a strong growth in the third quarter and following the fourth quarter. If you're looking for things on the table, there are a lot of momentum there, as I mentioned, but also the policy instruments is very strong. This year, the total fiscal support will be more than 9% GDP. And the monetary policy also proper with ample liquidity. They just announced a structural monetary policy account of 1.1 trillion RMB for the special support for infrastructure investments. And also, China may earlier issue the next year's the local government bond, roughly up to 1.5 trillion. So add them together, I think the policy will be very strong in the second half. And particularly, since we're moving into investing in, I think, in the, for example, carbon neutrality, new technologies, new tech infrastructures, and also support aggregate consumption. So yes, I think the first half growth is not very strong.
Dr. Zhu Min is already setting a very strong stage for us, talking about the different important sectors of the Chinese economy, not only the realities, but also the growth, possible growth engines. And Mr. Agouzine, coming from the capital market, how do you see the two words Professor Zhu just mentioned? One is stabilizing, the other is policy tools.
Yeah. So I would agree, 100% with the comments that Professor Zhu Min made, in the sense that we are seeing warming up in different sectors. We see this in the capital markets. We're starting to see some inflows into the mainland. And there's some other data points that are really quite impressive. For example, if we look at exports and the trade surplus that we've seen, particularly June, was just like an outstanding month. I mean, almost 100 billion of trade surplus, which is, quite remarkable. So when we combine that with the good performance of the market, that is forcing international investors to play a little bit of catch up, because what we've seen is international markets having a tough performance, and Chinese markets, the domestic markets, actually performing fairly well in the last couple of months, especially June. So I would say that will start potentially a wave of making sure that some of the international global investors play a little bit of catch up. So I do think that there is a warming up of the environment, I would say. Now, from a policy tools, as Professor Zhu Min mentioned, China has a lot of policy tools at its disposal to use. They've been using several ones in a consistent fashion, and I would say that our outlook is for a stronger second half.
Interesting. Catching up games, that's being proposed by you, Mr. Agouzine. Let me go to Mr. Sobotka. Is that true, a catching up game?
Yeah, I can only agree with what the Professor Zhu and Nicholas is saying. Is we remain very optimistic. This is difficult.
It's a panel that everyone agrees with everyone.
Well, I'll come to it.
Putting jokes aside, please go ahead, sir.
Well, generally, we share the optimism about China's economic prospects. First half of the year, obviously, was tough, but I think that's been mainly related to single occurrence events. China remains to have a very strong production base, strong operational environment, very strong manufacturing industry chain, and huge consumption potential. So for us, as one of the largest producers of materials into China for the new energy transition, China is an important strategic market and transition. China is an important strategic market and sales condition. So we monitor the market very closely. What we're also seeing is that China is now transitioning much more into a consumption-driven economy, particularly in the context of building back better post-pandemic. So we are very positive on the midterm and long-term outlook of China. And the business community is really asking the question outside of China, is China going to come back and save the world economy again by producing more growth? And I think the answer is yes. But in addition to that, we're also expecting to see that China will be a major driver for reducing global inflation, which is one of the biggest political issues and concerns outside of China is inflation. And of course, some of it is induced by hydrocarbon inflation, hydrocarbon price inflation, which is already coming down a little bit. But because China has such a large-scale industrial capacity, it is probably the single largest country that can actually address global inflation through more efficient supply chain and increase in production. And that's particularly the case for anything related to the energy transition. China is the largest producer of batteries, is the largest producer of energy transition technology. So it will help us drive down what we call the green energy, greenflation, right? Because there's such a tremendous amount of demand coming on in green energy transition types of investments. We have to work very hard that greenflation doesn't kill the energy transition. And China will play an incredibly important role in that transition.
Several points you already mentioned, which are very crucial for the latter half of our discussion about the prospect and the outlook. But let me focus once again on the immediate term. Dr. Zhu, we know that the pandemic has been putting quite some pressure on the growth of the Chinese economy, and also some questions in the minds of investors from all over the world about the prospect of Chinese economy for the rest of the year. Now, as an economist, how do you see that?
Yeah, I think that this is a huge uncertainty on the pandemic. COVID-19 is there. I mean, you really, because of the globalization, right, we have a various, now today is EA.5 now, and also EA2.5 and the variation also there. So there's a lot of uncertainty. I think if you're looking for the global, in Europe, in the States, cases really even Asia. So that's the concern. But I think that for China, most of the important things in the past 6 months, in the past the policy contain pandemics and clear, strong, and particularly on implementation side, right? I think the dynamic zero policy is always there. But the key issues, all the localities implement this dynamic zero policy. It varies across, the regions, countries, cities, even townships, right? So that's caused the logistic disruption issues and other issues. But I think, in the first half of this year, particularly, the clarity and transparency really improved on the implementation side of this dynamic zero COVID policy. So I think that's good. That will provide a very important confidence to the market and to the people, to the company. We don't know how the pandemics will, evolving, but as long as the policy is clear, people know how to deal with it. I think that's the key.
Another thing, if I could follow up, Dr. Zhu, is about the property market. As you know, China aspires to have a structural reform of its economy in which the property market will not be playing as big a role as it used to be, and that is for the longer-term health of the Chinese economy. But recently, we also see some issues with the property market. Some also might assume they would have an impact on the growth rate for the rest of the year. Your thoughts?
Yeah, I thought Benedict raised the hands, but let me be very quick to answer your question because this is an absolutely important issue. I think the property market has the short-term and the long-term issues. In the short-term issues, is to really maintain a stable supply and demand. The storage is way high, and demand at this moment is weak. So we have to think about how do we improve the supply and demand side, keep balancing system. And in the past 6 months, I think the financial sector support real estate companies to help them to complete ongoing projects. It's very important so they can deliver the housing to the people and also lower the interest rate, improve efficiency, the waiting time for the people who want to apply for it. The days really reduced from statistics 45 days to today's 25 days. It's reduced from 40 basis points now. So I think that this bring the market back is very important. But the second issue is a lot of property companies have assets, right, which remain the issue. We see various companies, sort of have a technical default on their issues. I think that probably will continue to happen. But I think that's the government's policy is to let the market. This is the company's finance issues. You have to use the market principle. But the authority policy is try to make sure to put hands on it will not expand to be a sort of even regional, not mentioned pandemic risk. I think so far, I think it's both health. But on the long term, I think you made a very important point. Property market used to be the major driver of Chinese economy. But now, given the population really peak, right, demand peak, the housing per square meter is really high by the international standard. So I think we're shifted to new things and we're less relying on the property. The whole industry has to go through the restructuring.
Mr. Aguzin, I'm sure coming from where you are, Hong Kong, you understand the importance of the property market and the housing issue. Putting that aside, how do you see the, quite a philosophical relations between the short-term difficulties and challenges, like what we mentioned earlier with Dr. Zhu, and the optimism and confidence of China's economy? How do you look at these relatively philosophical relationships?
So, I mean, in essence, I mean, being a marketplace for this part of the world, we're used to these fluctuations of like short-term versus long-term, and we have to deal with markets that sometimes are very difficult in the short term. I'll just give a little bit of an example, maybe going a bit more towards the capital market, but it does reflect, the economy. I think it's much more difficult to predict probably the next 6-12 months than predicting the next 10 years. So I'm fairly confident that if you take a 10-year view, that the GDP of China will approximately double. I mean, and that's fairly logical given all the trends that you've seen, all the investments, the increasing consumption, and the elements that are driving increased demand. Now, if I translate that into how that plays with the capital markets, today's capital markets in domestic China, between bonds and equities that are publicly traded, it's about $30 trillion US. Now, looking 10 years and doing some simple, calculation and estimations of, equity capital markets to GDP, the development of the asset management sector, the redistribution of allocation of assets from like the cash market. You know that in China, it's very normal to have like a lot of your money in just like plain deposit accounts. And that some of that is going to expand towards capital markets. There's a lot focus on the real estate. Home ownership is very, very high in China. So the household have a lot on the real estate investments. As that starts shifting to other sectors and the capital markets start playing a bigger role in the economy, it is very easy to see how the $30 trillion US of capital markets of today in the next decade will probably become over 100 trillion. I mean, that just gives you like, a massive expansion of capital markets, which is the lifeblood of the economy and help boost the economy. So I mean, for me, it's quite easy to look at a long-term outlook that is fairly bright. And now when I look at the next 6 months or 9 months, and people frequently ask me what's going to happen, it's much tougher to predict what's happening in the short term, especially in an environment where we have issues like pandemics, geopolitics, and different things affecting our market. So when we had the first quarter, it was hard to anticipate the second quarter in China as soft as it was. I mean, I think few people anticipated. And so those things will happen. I'm much more focused on just like creating the right infrastructure to make sure that we can leverage that long-term, outlook and long-term view that we have.
It takes more than a crystal ball, I guess, these days to look at the short term, what's likely to happen. Yet, go to you, Mr. Sobotka. Confidence for any economy is very important, as precious as gold and probably even more. So uncertainties and also a very unique economy like China, how do you see, the amount of confidence that when we are talking about this topic today?
The confidence in the Chinese economy remains very strong among the international business community. I agree that the current volatility is absolutely unprecedented. I mean, we haven't seen metal prices or commodity prices drop 30-40% within a month in history. I mean, this is one of the biggest drops in commodity price drops in the history of the world, and it's unjustified because fundamentally demand is very strong, and fundamentally the confidence in the economic development of China is very strong. So we do see these kind of bullwhip, supply chain driven and uncertainty driven volatility swings, but the fundamentals remain very healthy, and there's huge potential for organic growth in China. The government is addressing with very competent policy addressing the housing market. They're addressing the renewable energy shift, the energy transition. So yes, and you are seeing also that consumer prices in China are rising much more modestly than they are outside of China, and that's important because what you're seeing in many of the Western countries, you see just runaway inflation. However, it's not actually the same as the expected inflation by consumers. So the consumers actually have more confidence in the future than what the current prices are suggesting. So that's actually good news. So in the midst of that surging global inflation, I think China is again a beacon of stability. Of course, the biggest challenge is COVID-19. It remains one of the biggest risks to the economy, particularly on the consumer side, and also supply chains. What's been really hitting us also as exporters into China and importers from China are some of those uncertainties in the supply chain, but we expect those to smoothen out. And that will also drive down inflation and also help shorten supply chain issues that we're seeing today in many of our markets and customers that needs to be addressed.
International factors beyond the quote-unquote China's control. Professor Zhu Min, on those things, I also want you to come in with your thoughts. Global supply chains, geopolitics, as well as pandemic and many other things. How do you see Chinese policymakers are juggling with all of these factors and try to come up with reasonable and concerted policies?
I think the international economic volatility, uncertainty is high. Right? The first issue is inflation is on rising, right? It's really high. When everybody heard the U.S. have 9.1% monthly CPI, it's really, if you look for the Europe, right? Inflation is really on rising. So whether China will have sort of transformed in import inflation pressure, it's a big issue. It seems to me it's a global issue. It's not only U.S., it's not only Europe. Although every country may have a different level, but it's a global inflation coming, even in Japan. I think that's the real concern. In China, CPI is low, but if you're looking for the PPI is very, very high. And the PPI high because the inflationary situation in the international market, right? And the CPI is low because we have a huge capacity on the manufacturing, and also improve the cost, but maintain the very low. But that means on the downstream, companies are cutting their profit margin. They will hurt growth. So, although China's CPI is still low compared to international standards, but we got to be very careful about international inflation pressure. I think that's the second issue. Is the Fed policy also is not all clear. Fed is behind the curve. It's clearly seems to me. I say that at the time, and now they have to take a very strong and action 75 basis point increase interest rates, even more opposed like 100 basis point increase or whatever. But the real issue is how high the interest rates will go, and how much will impact the market. The Fed is in a very delicate and challenging situation for the U.S. financial market in historical 3 years. The government's debt also historically high, and the process is slowing down, and everyone is downgrading the U.S. growth rate now. So balancing all things together, once the Fed can put a strong interest rate in inflation, not all clear. And particularly, Fed start to use the liquidity, and sort of shrink, which is the new game. And we don't see that happen before. Right? It's the first time. So how much will change the financial? I think that's also, and the financial volatility could have also spilled over to Chinese. I think those are the most, immediate international action may have the big message. So we got to prepare global inflation pressure and got to prepare for unclear Fed policy.
The danger of recession has been with us, at least in the media, talk about it for some time. Mr. Sobotka, earlier you even suggested whether, quote unquote, China will save the world this time again. Of course, you were referring to the earlier references of 2008 international financial crisis and some of the earlier rounds of recessions. Now, how do you see the arguments coming from Dr. Zhu Min about China's capabilities, China's challenges now that it's facing in terms of working with the rest of the world, and the shared responsibilities of different economies, in fact, particularly those big economies these days?
Yeah, I think that's important. China, in the past 15 years, China really played a very important role to support global economic growth, more than 30% annually, and also because the huge manufacturing capacity efficiency and lower the global inflation pressure now. And if you're looking forward, I think the situation is more challenging now because the inflation is rising and the growth is slowing down. I mean, particularly on the growth issue, I would like to mention there are three trends on global growth now. The first issue is after a very strong stimulus, you will see growth is naturally fall down, right, which is slowing down. The second is also the uncertainty caused by Russia-Ukraine war and commodity price volatilities. And so Europe and US is all cutting the growth rates, the global growth rates were below. And my study, particularly when I was with IMF, and we found after a big crisis, the global growth in average potential growth will slow down. For example, in 2001 to 2007, the growth is in average 3.54, which is very strong. But after financial crisis, 2009 to 2019, it's dropped to 3.12. So it's roughly 40 basis points lower now. And we expect after this crisis, since 2023 to the further in the next 5 to 10 years, average global growth rate can drop to roughly around 2.5. The reason is the process hit structure of the economy, and not many countries has the policy and to do the structure to maintain strong growth. So I think that's the key issue. China and also all the main economic powerhouses today, US, Europe, and all the Asian countries. I think we should work together on the growth issue. Once again, I think the growth back to the table is most important.
Mr. Sobotka. Okay, sorry, I to cut you short. Mr. Sobotka, please.
Yeah, of course, China.
Recording in progress.
Of course, China, it was probably easier for China to generate the kind of growth that it was generating over the last 20 years that is going to be to generate similar kind of growth over the next 20 years. And some of that simply is just population. China's population is peaking. China's working age population has already peaked. And if you look forward today, I think we're hitting 8 billion people in November this year. We'll probably hit about 10 billion people by 2050. And the forecasts get less certain, but we'll probably be at 12 billion by 2100. So the population growth is not coming from China. The population growth is predominantly coming from other countries such as Nigeria, like the Congo, like Ethiopia, like India, Pakistan, Indonesia, and so on. So the population growth is shifting. So we're going to see a lot more growth coming out of those kind of countries. And that will be growth that will be very resource intensive and very CO2 intensive as well. Now, the potential for China is actually to be a leader in green growth and more broad-based, more high-quality growth, growth in services, growth in lower carbon-emitting activities. Now, of course, the new energy transition is going to play a tremendous amount of role in that for China, because China has, first of all, the policy in place to grow its share of renewable energy, its share of low-carbon economy. It has the industrial complex and engineering prowess to execute. It's not by accident that China is today one of the largest producers of solar energy, of wind energy, of hydro energy, and it's going to export more of that capability to other countries around the world, whose growth is going to be more energy intensive and CO2 intensive. So it's, if anyone probably has the potential to move from its current growth model to a more sophisticated, higher quality growth model, more driven by consumption, by lower CO2 emissions, it is China. And on top of that, it will export those capabilities. Now, the challenge is that there is a little bit of a geopolitical pushback for China to actually export its capabilities across the world. We ourselves as ERG, we have benefited quite substantially from the Belt and Road Initiative, but it was probably a lot more popular 5 years ago than what it was today. But we see the benefits that programs like this can generate in terms of bringing export and bringing capital outside of China. Let's not forget, China has, as Nicholas has said, China has an enormous war chest of investable capital, and as its population is aging and it needs to fund its pensions, it has to find investment opportunities outside of China that will bring returns that in the long term will safeguard those pensions, and those have to be made in countries that have a younger population, that have a lower quality growth, that need to move to a higher quality growth, and that is programs like Belt and Road, that's programs in Africa, infrastructure projects, renewable energy projects, and of course raw materials projects, because China will continue to be the world's larger consumer of raw materials in whatever growth model it chooses.
I see. Mr. Agouzine, coming from the capital market, how do you see the willingness in content of policymakers from various economies to deal with the current problems like Professor Zhu just mentioned, and also like Mr. Sobotka earlier talked about, which is a shared responsibility between China and other big economies to deal with the inflation problems, the global growth rate issues, and also, of course, fighting stagflation, to say the least. Please, sir.
Yeah. So, it's interesting to talk about this shared responsibility. And if we take a look back at the last few decades, some of the elements that really helped economic growth has been globalization, has been technology, the ability for countries to focus on what they can do better, the ability to trade. That is being challenged. So I'm actually quite concerned about what I'm seeing. I do see internationally, globally, a very fragile, let's say, economic infrastructure with the effects of interest rate rising very quickly, inflation that is, pervasive in many places. And then when you add to that countries that want to manufacture everything themselves, there's not relying on international counterpart as much, and we're seeing these deglobalization efforts. I think it's incredibly dangerous. So, if we want to make sure that we continue having global growth, we have to continue working together, trying to make those connections, trying to increase connectivity. One of the things that we're trying here is to try to increase connectivity between East and West. We think it's critical. The reason why we think our role is so important, because we are incredibly concerned about decoupling, deglobalization around every country using their own technology. In that world, it's going to be hard to control inflation. Everything is going to be more expensive. It's going to be more inefficient. And who's going to suffer? Probably the lower classes are going to suffer more, which is going to create not only economic instability, it's going to generate political instability, polarizations of views, thoughts, and obviously that is quite dangerous and concerning. So I do believe that the area of focus has to be, what do we need to do to make sure that there is continued dialogue, communications, connectivity between different continents, and how each part should, play a role in that area. I'm encouraged by seeing how certain sectors, and let's say sustainability, there is an effort to try to, do more together, to try to coordinate efforts. But aside from that, I don't see much. And obviously technology is one area that everyone is being very, very defensive. And it's an area, if anything, that we should try to encourage more sharing Healthcare is another area where there's been a little bit. I mean, hopefully we see a lot more. I mean, in there. I mean, it's an area that it's important to collaborate and to try to make sure that we can address some of the big issues that we're facing globally. But that's the essence of our view. Yeah.
I guess you are echoing with many of the calls coming from the international business community about what we really need to do together right now with the great lessons and experiences we learned over the past decades. Thank you, sir. But I want to dig a little bit more about the connectivity issue you talk about, especially with the angle of the growth engine, as Professor Zhu Min and Mr. Sabatka also earlier mentioned, the green economy and also some of the latest technological development, as well as the prospect of 2030, 2060 regarding carbon plan in China. How do you see that is having an impact on the capital market? How much potential is there, sir?
Yeah. I mean, there are some areas where we're seeing tremendous growth. I mean, let's say, for example, take big bonds offering, green bond offering. I mean, those have shot up significantly. So from a capital point of view, relying on green bonds has been a much more important thing. And then you look at certain sectors, like, for example, we take EVs. EVs has been a huge driver of capital issuance. We've seen, and particularly China today, I mean, last year we had 3.3 million vehicles sold in the country, and we see this as a continuation. Then you look at some of the investments that are going to be needed around renewables, sustainable energy generation. That is going to double between today and 2025, just in the next 2.5 years. So that will require capital markets to provide the necessary capital. And we're seeing a lot of interest. We've also tried to set up like a carbon council to make sure that we can do more and more in terms of the ability of companies to trade carbon credits. That is an emerging area. I mean, there's a lot more noise than actually things being done, but the reality is over time, as we get closer to the targets of 2030, 2060, I mean, I would expect that there will be more and more.
China just celebrated, if I remember right, last week, the 1-year anniversary of carbon trading regime in this country. Of course, it's only a starting point. Mr. Sabatka, though, how much do you see that could be a growth engine, especially given the fact right now the world is experiencing quite some difficulties of energy, and we see even some of the European countries have to take up coal again for generating power for the short term. So how much will that be a growth engine, even for an economy like China's?
Well, first of all, the clean energy transition is a global necessity because the CO2 molecule or the methane molecule doesn't care where it's being emitted, right? Because it will affect everyone around the world. And as a matter of fact, there's a lot of discussion, particularly in Europe, about reducing carbon emissions. And yes, historically, Europe has emitted more carbon, CO2, than China in its history. So there's a big debt that Europe has towards the world compared to other regions. By the way, the US is the second biggest, and I think China is the third biggest. So the challenge really is China. Right, you can reduce all the CO2 emissions of Germany tomorrow. It will be about the equivalent of 2 or 3 weeks of China. So it doesn't really move the dial. That China has to be part of that global discussion around the clean energy transition. And that's really probably the biggest fundamental change of an economic system in history. I mean, probably similar only to the introduction of the internal combustion engine or the second industrial revolution. I mean, it's a fundamental change in an economic system that we're witnessing. Of course, that comes with considerable opportunities. And it's probably, I like to call it the biggest purchase order in history for the commodities, our industry, the metals and mining industry, because the sheer amounts of material that is going to be required to feed the investment that Nicholas has been talking about in renewable energy, in electric vehicles, in energy storage, because all those those infrastructure investments are a lot more material intensive than traditional energy generation, particularly copper intensive. New energy materials such as cobalt, like lithium, and others. Just to give an idea, I mean, there were about 8 million electric vehicles in the world in 2020. The latest forecast is targeting 120 million new energy vehicles by 2030. That's only 7 years from now. So this is a fundamental change, and China is driving this demand. It is the biggest new energy vehicle market. It's the biggest renewable energy market. And of course, China will be leading this for the next 10 years. There's tremendous growth opportunities. For us, we personally are involved in this because we are one of the largest producers of energy materials such as cobalt, where we expect the growth to increase by 20 times in the next 20 years, which has never been done before. The world has never produced so much raw materials in such a short period of time. And that's driven by China, both on the consumer side, but it's also driven by China on the supplier side, which is unique. China is not just the world's largest producer of those materials, it is also one of the largest consumers.
Mr. Zhu Min, I know at this moment when we are talking, we also understand trade officials from China and also the European Commission are also talking and discussing with one another. This is just one of those examples how with this important topic, people are beginning to improve their communications. Having said that, though, how much will that be a growth engine for China? You earlier touched on that, but I want you to elaborate a little bit more right now.
Well, I think the green issue is the key topic of conversation between China and the U.S. And you think about both sides met in Tianjin, in Shanghai, that was in the past years, and also in the Glasgow meetings. And I think it's very important if China and U.S. can work together on the carbon neutrality issue. As Benedict mentions, carbon neutrality must award, right? It's involving a few things. The first issue is investments, which short-term support the growth, long-term support transportation. The second issue is technology, because we all, at Tsinghua, we say just 1/3 of technology probably on table already, 1/3 in the process, 1/3 is we even don't know, right? And we have to work together. And third issue is we need to build a new carbon neutrality governance of the world, because this is the complete new world in the future, right? So I think that both sides should and work together on issues that have huge potential. Good news is both sides indeed are taking on those things, are taking to, trade, on the flow of financial service, on all those things. And I think the carbon neutrality issue become more and more important issues between the conversation and the negotiation of China and the U.S.
How is China preparing for that at this moment, Professor Zhu?
China is very much seriously committed, right? Because for two things. China, if China don't join, as Benedict mentioned, obviously the world will not be able to fulfill carbon neutrality in the 50 or 60. China share the responsibility to take the lead. The second issue is also China is on the transitional form from classic growth exports, very much to cheap labor, to high quality growth, and the carbon neutrality provides perfect scenarios and the drivers for China. So China is very much committed. And investments is huge. We estimate, in 2050, even the energy transformation will need roughly 186 billion. And also, China is pushing for the technology on the solar. China is the leading producer of solar panels, solar parks, also windmill, and also as a benefit electric cars, all those things, and combine the carbon neutrality with the 5G, with digital technology all together. So I think that China is really committed to push all the way. If you're looking for this year, a lot of investments is on the infrastructure of carbon neutrality. Yes, last year we had a bumping on the coal, on the pop issues. This just shows how serious China was committed to this carbon neutrality, right? And so moving forward, this is a huge opportunity for China moving into a new growth model and a growth engine.
I'm sure, Ms. Daguzin, that the capital market is so eager to quote-unquote cash in, but rather to participate in this process. And of course, the Hong Kong Stock Exchange plays a connectivity role in that regard as well. Tell us more about that.
Yeah, well, I mean, as I mentioned before, I mean, our role is to be a super connector between East and West. We want to make sure that we maintain that flow. I mean, sustainability is one of the areas that we're trying to play a role. But most important, Hong Kong has a very, very unique position. I mean, it's the most international city of China. And at the same time, it's the most Chinese city outside of the mainland. So that unique position allows for things to happen in Hong Kong in a way that international investors are very used to. There's many issues, including the language, common law, I mean, the infrastructure, institutions. And so it's very easy for investors to participate in this market. And we've seen that over the years. It has become an asset management center of the world. So today, from a wealth management center, there's like about $4.5 trillion being managed out of Hong Kong. From a hedge fund point of view, there's like 450 hedge funds from all around the world that came and established and made Hong Kong their home. And so we see a great, vibrant market that has developed that many people have discounted for many, many years. So many people called for the end of Hong Kong. And it's not happening. The resilience of Hong Kong is remarkable, despite all the unrest, pandemic, geopolitics, and all the global ups and downs. I mean, we've seen, for example, just in the last 2 years, the volumes in Hong Kong. In 2019, it was in our market, $89 billion, $87 billion per day traded. Last year it was 167, almost doubling the volume traded over the most difficult 2-3 years that you can ever imagine. So the resilience of Hong Kong is just remarkable, and it's a very, very important role, as you mentioned, Ken Wei, of connecting East and West and trying to facilitate those flows.
What about for international investors, Mr. Sabatka?
Yeah, for the international investors, of course, China is traditionally a very important market for investment, and particularly in our industry, where both our biggest competitors, our biggest customers, and our biggest technology partners come from China, and that's very good. But I think what is important that even though there are potentially geopolitical issues temporarily, that we can only address the challenges, particularly for the energy transition. We can only address those in a collaborative fashion, and China needs to be sitting at the table. Because China is the leader in the energy transition and the biggest carbon emitter, so it has to be at the table. And that's why it's so important to have these collaborative cross-value chain organizations. Actually, it was here at the World Economic Forum that in 2016 we founded the Global Battery Alliance, which is a multi-stakeholder organization exactly along those lines, with involvement from upstream companies, downstream companies, host governments. The Chinese government is involved. The United States government is involved to bring together, today we're about 120 organizations spanning the entire value chain, to establish a sustainable energy storage value chain, which is incredibly important to make the energy transition real. And that can only happen, this Global Battery Alliance that we founded at the World Economic Forum, it can only happen to achieve the targets for energy transition, for better traceability, for better sustainability in the increase of the supply chain, if we work together. So the GBA is a very good example for that. And we need more of those multi-stakeholder, cross-regional, beyond geopolitics organizations, because the challenge that we have ahead of us, it can only be addressed in a collaborative fashion and not if we work separately.
It is a reality that we're facing paramount challenges, one after another, and they are forming the backdrop both of our political landscape and our economies. But having said that, though, we have to work for the better, even amid this environment, this challenging environment. And a platform like this, which is the New Champions Dialogues, and also the World Economic Forum, certainly help us to communicate, if not be an initiator for actions. So I want to thank all of you for joining us for this discussion. Before we wrap up the panel part of the session, I would love to have all of you to share with us 2 keywords, if you can, or one, about the word that comes to your mind when we are talking about China's economic outlook. You know, it's been almost an hour's discussion. A lot of people have a lot of takeaways, but 1 or 2 keywords would really help them to get the key messages. Professor Zhu Min.
I think it's economic transformation, more greener, and also high productivity. And also, if I may have the second word, I think it's international collaboration, particularly on the carbon neutrality side.
Okay, it seems that Professor Zhu Min already elaborated the word into phrases. But let's go to you, Mr. Sabatka.
Well, I guess not much I can add to this. That's why Professor Zhu is a professor, and I'm not a professor, so not much I can add. But really, it's a question that we have to find a mechanism for collaboratively capturing the new energy transition, which we believe is the biggest opportunity for global economic growth and inclusive and just growth for the next decade. So we have to do that together.
That everybody is having a lot of messages. Last to you, Mr. Aguzin.
Yeah, this is an easy one for me. I mean, it's connectivity, maintaining connectivity.
That is the key. Certainly, for sure. I want to thank the 3 of you really to share with us not only the information, but also your insights as a result of decades of work in your own fields and bring us all the latest analysis on China's economic outlook. But I'm also very glad now to be joined by Jeremy Jurgens, who is the Managing Director of the World Economic Forum, to help us understand his thoughts and bring us some final words on this session. One thing I need to say is that, Jeremy, I see you, carefully listening to every speaker during the panel, and I'm sure you have a lot of thoughts to share with us right now. Thank you, Jeremy.
Great. Thank you, Tianwei. And this was a great session and an excellent way to wrap up 2 days of our New Champions Dialogues. We really saw bringing all the discussions that have taken place until now. We've had several 100,000 followers online following these sessions. And I think this is really a rich way to tie it together. I mean, if I had to introduce my 2 words, what I took away from this session was actually the global interdependence. Well, we started out the discussion on very much the domestic outlook, the domestic, opportunities and challenges. We quickly came into a number of the critical global issues that are actually driving here. Energy, I think that was probably first and foremost there. And, as we heard from the panel earlier, we're much more uncertain in the near term than we are in the medium term. But in this case, this medium term extends at least into the next 6 to 9 months. Both in the context of energy, but as well as around COVID. So the uncertainty we see on energy supply, on what the implications are of the conflict in Ukraine, how that plays out, and bringing coal back online. So there's a number of near-term disruptions that we're facing there. I think this aspect of carbon neutrality was also quite important. We didn't explicitly call it out. I don't think anyone actually used the words climate change. But if we look around the world at what's happening today, we see droughts, we see the heat waves, we see the wildfires, and we see massive disruptions. And, the poorest countries are the ones most affected by this, right? So when we see countries that are importing energy, importing food, they have dollar-based debt. They're the ones that actually suffer the most. And this tied into the comments that we made around both political volatility and political uncertainty, right? So we're seeing this both in emerging markets, but we also see high levels of uncertainty in developed countries. We just seen a change in government in the UK. We have midterms coming up in the US. So all of these will play into these high levels of uncertainty that are underway here. I also took away the importance of supply chains. Nicholas spoke to connectivity, and we could almost think of these less as supply chains and almost more as networks. Again, there's high levels of interdependence. There isn't a singular chain anymore. At every stage, there's multiple other connections that are in place, and a disruption in any one of those leads in disruption to the entire system there. Now, last area I probably took away here was on, the importance of inflation, policy levers. I think here really positive feedback from the contributors that, they believe China does have the policy tools in place. And if we look back to the last quarter as a kind of stabilizing quarter, I think there's high levels of confidence within this group that the policy tools are in place to help return to growth. And ideally, we can see also China returning to its place as an engine for global growth, not only that growth within China, but also, more broadly. And here, the demographic trends that we see globally, I think it was Benedict that called out the 8 billion global population that we'd expect by the end of this year. If we want to have them a quality, carbon neutral lifestyle, then China's going to play an important role here just with its traditional industrial engines, but also as a key supplier in many of the domains needed, whether that's wind, polysilicon processing, lithium processing, or other domains. China's going to play a critical role in all of these, which is a positive, provides a positive outlook in that medium term for the economy there. So I'd really like to thank all the contributors here today. I took a lot out of this session. This will also inform our ongoing work as we have programs in all of these areas. And we will be working to promote cooperation among both, all countries globally, but also across industries and, political actors. And I think together we can actually help contribute to an effective continued global growth, both in China as well as beyond. Back to you, Tianwei.
Thank you so much, Jeremy. I feel as the moderator of the panel much more powerful when we have final remarks coming from you to wrap up some of the key takeaways of the session. But thank you so much for you and the team of the World Economic Forum to make this discussion possible. With that, we are coming to the end of this session, China Economic Outlook. As a moderator of debate programs, I always hope my panelists will have very different views with one another to make my job easier, so they would debate among themselves. However, at this moment, when the world is so divided, it is heartwarming and creating confidence, shall I say, from our panel today that I see more consensus and share of thoughts among our panelists and beyond. Thank you so much for being with us. Bye for now.
Thank you.
Thank you. Bye-bye.
Take care.
Well, thank you, everyone. I enjoyed this session. Thanks, Tianwei, for moderating. Jeremy.